Alright, welcome back to the channel, you savages. And before we close out the year, we need to go over one stock because tomorrow things are changing. You see, come January 1st, the trading day will be closed. However, a stock will be affected. That stock is Netflix. Netflix's most popular show, The Office, will be removed come January 1st. Their contract is now up, and The Office will be moving to Comcast Peacock. For Comcast, this is honestly pretty bullish for their stock. For Netflix, I do see this affecting the stock negatively because there's over 20 shows being removed from the network. Short term and long term, I have conflicting interest. But before we get to that content, I need you to do one thing and one thing only. Hit the subscribe button below. I am pushing out content daily on the most important and influential stocks. You see, I'm a man of the people, for the people. I keep my videos extremely short and to the point, between 5 and 6 minutes, because I know our brains can only handle so much of this knowledge. But that's it, boys. Let's get into it. I have literally been waiting to make this video for a good amount of time because I knew this day would come. Before we start talking about the negative sides of Netflix, I want to talk about the positive. Honestly, what we're going to be seeing was expected for some time, and it was kind of the plans of the creators of Netflix and the CEO. The CEO actually spoke on this several years ago, saying that he wanted to shift the content to overall originals on the platform rather than licensing content out. So for instance, with The Office, they're paying NBC a pretty large amount of money.
I declare bankruptcy!
Same with something like Friends, that 70s shows. Whereas with originals, of course, they're not paying licensing deals on those. They're just paying for the production of the show. The goal here was moved to about 85% overall of Netflix's content, and they're kind of moving in that direction, with shows like Ozark, Cobra Kai, other original movies like Tiger King. It was a massive 2020 hit. As they're trying to make this overall transition, of course, there's going to be some unhappy subscribers. Also, there's a lot more competition right now, and that's kind of where the negative comes into play. I think Netflix is going to do well long term, but in the short term, that's where I'm at right now. And chances are, if you clicked on this video, that's where you're at. You're either interested in some type of option play or you're looking to buy the dip, which the dip buy will be nice. The Office being removed from Netflix is pretty big. It has been the #1 show on Netflix for several years. I think it might have been knocked down this year, but it still makes up a majority of the watch time. In this video, there's two things I want to talk about. My Comcast long, I'm playing Comcast on the upside, and in the short term, how I'm playing Netflix because it is going down. I did signal this trade. This is a personal play of mine, not financial advice, but I do share my trades with everyone. We saw a massive uptick going into the end of the year, which kind of makes no sense. They're losing a lot of shows, and this will affect them, especially one being The Office, one of the #1 shows kind of ever. They were up about 3 to 4% on the day. These are only week-long puts. That's why I'm saying it's a very short-term trade. Going into Monday, I see downside right off the bat. I don't think there's going to be any type of positive news on Netflix going into January 3rd through the 8th. It's going to be pretty bearish. Comcast, on the other hand, it's looking to break another leg, and I'll post a chart right about here. And I think it's going to run to $54 to $55, but we're going to get more into the charts here in a second, so bear with me. I also think Comcast is going to do very well long term. As far as Peacock, Xfinity, and their other brands, they're doing very, very well. Netflix, on the other hand, I think shorter term, maybe over the next month, they could trend a little bit to the downside. But overall, Netflix is going to keep doing well. Their originals are stepping up. They're getting more viewers. They're probably going to raise their rate on their subscription. And now they are pivoting heavily to the original side of things, where you can't see their shows unless you have their network. But enough of the talk. Let's get into the charts. Okay, so I'm going to highlight a few areas, so follow along. We are on the 4-hour chart, so this is actually kind of a long period of time. Throughout November all the way to December, we were pushing up at a very slow and gradual pace. This is pretty bullish. I did mark out a heavy resistance and support zone at this top, this blue box level, which we tapped into and then got rejected. You can see that there is a lot of volume here. As you see, we were wicking straight through it here, and we got stuck for a while here, and then right here, we quickly flipped it. So this was the optimal entry, this 541 zone. I'm not saying that we're going to go all the way down to 480, but I think there is definitely some downside. I definitely think since we wicked and we got kicked down so quickly before the end of the day, there's definitely downside here. I would not be surprised to see a 510 to 500 retest down here. This was a pretty heavy support, and if you look on larger time frames, this 505 to 500 level has been a pretty big support and resistance, and when it flips, it does pretty well. So near to short term going into next week, I would be targeting this area. Now that's a pretty big drop, 10%. I'm not saying that happens in one day. We'll have to see. But definitely, guys, don't be greedy here. We're going to get some volatility pretty quick come on Monday. So be prepared to take some profits. Another thing to take into account is that we do have earnings come the 18th or 19th. That's going to be a pretty key thing as well. The earnings most likely will not be that great, and we might see subscriber counts drop. So if you're going to look for long-term buys, I want to wait till after the 19th. There is always a possibility we dump below the 500 level. So I would really recommend waiting till after the 19th. I do not think those earnings will be good at all. There's a very low possibility there, especially with their competitors doing so well. Disney Plus being the main one. They are killing it. Disney Plus is single-handedly holding up the Disney brand during this pandemic. Kudos. But let's talk about one of my favorite stocks that we have, Comcast. I've been preaching Comcast for over a year now. It is beyond one of my favorite stocks. They have so much upside and so much potential. They're very diverse in their company between Xfinity, NBC Network, and now Peacock, and more coming. They're actually killing it. I think the model behind Peacock will succeed as well. As you see here, we broke the key resistance and mounted it. This is ultimately where we got entries on our call options. We entered actually a little bit below at that 5180 marker, but I was very bullish on this. And I do believe the shows coming into Peacock will benefit it as well. And if you're late to the party on Comcast, this is what I would look for on the chart if you're looking to get some buys. We broke above. Now we obviously want to see a retest of this $52 level and more upside. I'm targeting the $54 to $55 range. I think that's a little bit pushy, but I think we definitely could get it. If we zoom out to the long-term view of things, as you see, we bull flagged and now we're breaking out for another leg up. There is a lot of potential to make a $54 to $55 push, and I will be a part of it. I don't think there's tons of stuff to go over on the chart because I'm just giving you my overall targets, especially on Comcast. Just look for that retest for potential entries. I don't think people are giving enough attention to what The Office brings to these networks. Massive amounts of view time that this show gets is ridiculous. What? And then on top of it, it's a rewatchable show continuously. I'm telling you, go to Tinder, go look at the bios. They all got something about The Office in it. What can I say? I know my Tinder game. So let me sum up my view really quick. So Netflix, I am seeing some downside coming to that $500 range, not only because The Office and some other shows are leaving, but because their earnings are coming up as well, and I don't see those doing well. Comcast, I see it breaking up to the upside to the $54, $55 range. It could go higher, but that's where I'm targeting on the safe side. The long-term chart looks extremely bullish. The stock is doing extremely well, and The Office and other shows are being added. This is just a lot of good news with no bad news. That is going to wrap up the video, guys. If you got anything out of this, hit the subscribe button below. More trades, more videos coming. Namaste.